if you bring in 120K revenue, but spend 40K on expenses, your net profit is 80K, right? So you're above 60. As a sole prop or LLC, you'd owe about $12,240 in self-employment tax. As an S Corp, if you pay yourself a 50K salary, the rest is distribution, saving you roughly $4,000 to $6,000 depending on your state and payroll structure. Remember, you pay taxes at the federal and state level depending on your state. Right. Also, if you're going to put yourself on payroll, you might need to file unemployment insurance in that state and look at some state laws for employers, right? Even if you're paying yourself. What is up, everyone, and welcome back to the channel. The purpose of today's video is to educate physical therapy business owners on the tax saving power of proper entity selection, all while referencing the IRS code, Internal Revenue Service code, sharing my personal story and real life examples of clients that I have helped save thousands of dollars in taxes. So if you're a physical therapy business owner making over $60,000 a year in net profit, and you're still operating as a sole proprietor or a basic LLC, you are burning cash and funding the IRS, the Internal Revenue Service, more than your future. If you do not know who I am, my name is Brandon. I'm a physical therapist turned entrepreneur, and I've paid massive tax bills, but I've also attended law school, and I run, depending on the month, a multi-6 or 7-figure agency. I've been helping PTs legally build wealth and also protect their profit. If I knew then what I know now about S Corps, I could have got tens of thousands more in my own pocket. So let me help you skip that mistake. Please listen, please take notes. Even if you're a beginner, this will help you in the future. Like, comment, save this video, favorite it, share it. Now, when it comes to setting up a business for physical therapists, most PTs fall into one of these categories when starting out. 1, sole proprietor. You file a Schedule C, maybe use a DBA, and just put your social. It's simple, but you pay 15.3% self-employment tax on all net profit, IRC, Internal Revenue Code Section 1401. When it comes to LLCs, which would be 2, it's going to offer some legal protection, but no tax benefits unless you choose how to be taxed. By default, the LLC is treated the same as a sole prop, and this is where you're still going to pay that 15.3% tax. Now, when you tax your LLC as an S Corp, this is where smart business owners go. But you must pay yourself a salary W-2, and the rest of your profit gets distributed without self-employment tax. IRC, Section 1361 to Section 1379. Example, if you bring in 120K revenue, but spend 40K on expenses, your net profit is 80K, right? So you're above 60. As a sole prop or LLC, you'd owe about $12,240 in self-employment tax. As an S Corp, if you pay yourself a 50K salary, the rest is distribution, saving you roughly $4,000 to $6,000 depending on your state and payroll structure. Remember, you pay taxes at the federal and state level depending on your state. Right. Also, if you're going to put yourself on payroll, you might need to file unemployment insurance in that state and look at some state laws for employers, right? Even if you're paying yourself. Now, here's what I've seen across the 100 plus PTs I've helped directly and the 1,000 plus I've guided into higher income. We'll use a client named Sarah. She ran a pelvic floor practice. After switching to S Corp, she saved over $9,000 in her first year and reinvested into her branding and website. We have another client, we'll call him Mike, was making about $6,000 a month net running a hybrid cash clinic and online coaching business. He moved from LLC to S Corp, and in 1 year legally kept over $7,500 more, which was money he used to start hiring support staff and allowing him to scale. And for me personally, I was too slow when I started a lot of these businesses. I didn't know, I didn't have the education. I was too afraid to ask questions. And even though I was in coaching programs where I was paying over $18,000 a year, these motherfuckers never told me. And I ended up paying out a $20,000 tax bill that could have been cut nearly in half had I made that election earlier, right? I thought my LLC was enough. It wasn't. I thought the business coach that I was fucking paying wasn't gonna fuck me over. I ended up doing it anyway. I didn't have payroll. I didn't understand what counted as a reasonable salary, and I learned the hard way. Now, this mistake cost me a lot of momentum, and it gave me a mission to make sure other physical therapy business owners do not repeat it. Since I've made that mistake, I've sat in law school tax courses, worked hand in hand with CPAs, and built back-end systems for over 100 PT business owners. Most business coaches skip this. I know because I've been in programs where I paid lots of money, actually $200K over the past few years, and they didn't fucking teach me this, which is why I'm making this video for you now. At the end of the day though, I want you to understand the IRS isn't your enemy, but they're not here to protect your money either. It's up to you. I want you to understand that if you are going to elect S Corp status, make sure you're having consistent 60K plus profit per year, and you must pay yourself a reasonable salary. You can use IRS fact sheet FS-2008-25. You must use a legit payroll system like Gusto or QuickBooks. I use Gusto. You file quarterly forms, 941s, and annual forms, 940, W-2, etc. If you do this wrong, you'll trigger audits. So for me, Gusto does this for me. Done right, you'll keep thousands more every year and reinvest it like a smart CEO, a smart business owner, right? It's one of these things people will call themselves CEOs, all this shit. This is the shit they don't even fucking know. So be careful who you listen to. You do not need to be making $250,000 plus benefit. So here's the rule. If your net profit is $60,000 a year or more, the savings outweigh the costs, right? If you're growing fast online, cash-based or digital coaching, you're likely past that threshold or will be soon. I don't want you to wait until April. File IRS Form 2553 early in the year and get your foundation right from the beginning, especially once you know you're past that $60,000 mark. Most S-Corp owners stop here, but there are 5 more tax strategies that can stack on top of this and create serious wealth. In my next video, I'll show you how to use the Augusta rule, hire your family legally, and write off your life without getting flagged in a legal and tax compliant way. So if you are serious about keeping more of what you earn, hit subscribe, turn on notifications, like, comment, and share, especially if you're on YouTube. If you're watching this anywhere else, appreciate comments and shares, especially on Instagram. And I do have a call to action for you today. If you want my S-Corp checklist, the CPA communication template, my full compliance plus payroll guide for healthcare professionals, drop a comment below that says tax strategy or click the link in the description. I built this so you can skip the pain I went through and start building wealth now, not after 10 years of tax mistakes. So please subscribe for more wealth, money, and legal content built specifically for physical therapists. This is how you buy your freedom, and I hope to see you in the next video.